Welcome to the SPRH podcast. We are here with corporate and keynote speakers Matt Ward and Dan Candell. Their mission is to help small business owners like you take massive action. Let's get ready with Matt and Dan so you can learn how to take massive action in your life and your business in 3, 2, 1.
Welcome to the SPRH podcast, episode number 48. Today's guest is Cody. Now, I could tell you that our next guest is a CPA, but instead of boring you with the details, I'll let you know he was actually on the force for 17 years in New York City, and now he'll tell you how we can have a tax-free life. It's time to take massive action and learn how we can have a tax-free life with Cody. Welcome, Craig.
Thank you very much for having me. Psyched to be here.
Awesome. Thanks for joining us, Craig. As you know, we help small business owners take massive action. Can you share with our listeners what massive action you've taken and what the results of that massive action were?
Yeah, it was about 6 or 7 years ago. I decided I was going to take massive action and grow my business. So I went out there with a plan to actually meet people and do what I needed to do to grow.
And what were the effects of that? When you say you went out there, tell us what that means. What did you do?
That meant I left my desk and I went out and I had breakfast, I had coffee, I had lunch, an occasional dinner with everybody I knew. This guy's
right up my alley.
Yeah, everybody I knew.
I love to eat for a living. This is how I grow my business. My business gets as wide as my waistline.
And
but it's effective, right?
My wife used to say to me, she says, why are you always out? And I'd say, basically, if I'm behind my desk, I'm not making money.
Yeah. I think that's so true. People have this concept of the more they're working behind the desk, the more they're working behind the desk. And that's true. But you have to be getting leads. And I tell this to business owners all the time. Get out of your office and start meeting people, start networking with people, and just get out of your office, start speaking, doing something that causes you to open your mouth to tell other people about what you do.
And it works.
Yeah. It works.
For sure.
Yeah.
So let's talk about when to open your mouth and not open your mouth. And I'm not really referring to your experience as a New York City police officer, because that might get us in a lot of trouble here. But instead, oftentimes our accountants and people in our financial lives, they don't always want to know everything that we know. So you help people live a tax-free life as close to legally possible as I would imagine you could. Tell us what that basically is, because I think that's the type of accountant that we all want, right? The one that says, hey, let's take as many deductions as possible.
Well, we got to do what's legal. So and there's a lot of stuff in the tax code that nobody's doing that's perfectly legal. So the idea is take advantage of what the tax code lets you do. I mean, if Buffett could do it, Trump could do it, Gates can do it, why can't you do it? All right. You don't happen to have a staff of attorneys and CPAs on a call, but you could take the time, be proactive, and take advantage of what you're able to take advantage of.
Mm-hmm. What are people able to take advantage of? I want to know. I want to know.
Well, first of all,
how long is this list going to be, Craig?
We'll keep it short, okay? But the first thing is people have to plan. Okay, they need to communicate with their accountant, and they need to plan. And 95% of the people out there are business owners, and that's what we work with is business owners. They're not doing that, okay? They're thinking, if I call my accountant, it's going to cost me money, okay? I tell people, you know what? Your accountant should be an income item, all right? Because if you communicate with him and they communicate with you, you're going to uncover areas where you could save taxes. So the biggest thing is failing to plan, all right? The next thing would be, having the wrong business entity. Should you be operating as a sole proprietor? Should you be an LLC? Should you be a partnership, an S corporation, a corporation? All right. There are certain advantages to each of those depending on your situation. So you need to communicate with your CPA and figure out what works best for me.
So, Craig, you mentioned CPA, and small business owners might be 1 person, 2 person, 3 person shop. Do they really need a CPA, or is just a tax advisor or an accountant? I mean, how do they know who to pick and how?
Well, here's what they need to know. They need to know when was the last time their CPA, advisor, enrolled agent, accountant, whomever they are, came to them with an idea to save taxes. So that's the guy they want to be working with.
Regardless of the designation, right?
I know plenty of guys out there that are enrolled agents that can run circles around guys that have been certified public accountants for years. All right. So, obviously having the designation helps. It means you've been properly trained. Okay. But if you're not being proactive and if you're just putting the right numbers in the right boxes, okay, that's just being reactive. We want to be proactive.
What? And so why? Like, why? I mean, I get proactivity, right? That's what I talk about. I talk about eliminating procrastination from your life with chocolate. But I'm all about proactivity. I'm all about taking action before others. I have a sign on my office wall here that says to be proactive is to be successful. It's been here from day one. But what does that, can you relate that to a business owner about proactivity? What does proactivity have to do with the finances of your business, and why does that matter?
So you have money coming in, and you have all these expenses to pay, and some of them you have control over having that expense or not, all right? And then you have taxes. That could be your biggest expense. And you do have some control over how much tax you pay, because the code says you can do certain things that I guarantee you 99.9% of the people listening are not doing, all right? So by being proactive and communicating with your accountant, CPA, advisor, and saying, what can I be doing different, and getting feedback from him or her. And if they're not giving you feedback, then you need to look for somebody else.
There was, I would say I was 25 years old, 24 years old, and I did an event. I got a check for the event, and I got a notice about 2 or 3 years later that I was being audited for that year. And I sat down with my accountant and I said, what the heck is this? I thought I was doing everything right, and and turns out I was. The IRS, when they reported the 1099 in, moved the decimal point over 2 places. So instead of saying $650, it said $65,000 of unclaimed income. I said, what the hell is this? So we ended up getting it resolved, but it was this whole process where then they opened up an audit for the following year to make sure things were congruent and everything like that. And just hiring the CPA to go in there and to bargain with the IRS was a big deal, and it was a big expense. But it taught me a lot about tax prep. It taught me a lot about what to do, what not to do, and it changed my entire business around. What are things that business owners, or that you see some business owners do, that can get them into trouble?
Not documenting things, not keeping receipts. I mean, like everything we tell a client to do, the T's need to be crossed, the I's need to be dotted. Because you know what? When you get that notice 2 or 3 years down the road, do you want to have to try and remember what you did and have some proof? Whereas if you have the proof going in, you close the file, you put it away. If you get a notice, if you get an audit, okay, and typically when you do get an audit, it's going to cover a couple of years, okay, everything's there. It's not a big deal, okay? Listen, anytime you get a notice from the IRS, it's a big deal because nobody wants to get that notice.
Right.
But, at least you're doing everything the right way. You're documenting everything. So, you should be working with somebody. If you're a business owner, okay, and you're making some money, you should be working with somebody, having somebody doing your books, somebody going through, making sure you're doing everything the right way and giving you advice on how to save taxes.
How often should they be going through that stuff, Craig?
Well, we deal with, I'll just tell you how we do it, okay? We deal with business owners and real estate professionals, and we send them a link every month it could be a 15-minute call, half hour, 45-minute call to go through the P&L and just really to know what's going on. Okay. Because when you're having that conversation and they tell you, well, you know what? Yeah, well, we sold our primary residence and now we have this place where our building that we actually run our business from, we're going to put an apartment on it and then we're going to sell it in 2 years and we're going to take the $500,000 exemption and we're ready to go get permits. I'm like, no, stop, time out. This is owned by your business. It doesn't work that way. So, and, by communicating, the more you know what's going on, the more you can help somebody.
How does your training as a New York City police officer help you from a CPA standpoint?
Communication. I learned to communicate with people in the police department because I was dealing with people in all sorts of levels, from the corporate titan CEO to, the person, that's not making any money, and maybe the homeless person. So you had to know how to communicate with everybody.
That's the one thing I learned about being audited a few years ago, is that communication is key with the IRS. And as soon as you get a letter or notice, whatever it is, do something about it. And that's what we were talking about, being proactive, right? Don't let it sit there. Don't keep looking at it in fear, because then the more you look at it, the more that fear is going to build up. And that's what happened to me at first. I put it off, and I'm like, oh my gosh, I don't know what to do. I don't know what to do. I don't know what to do. So I called my CPA, and he said, call the IRS. And it was the best thing that I could have ever done, is communicating with them right off the bat. And now my CPA keeps my record on his desk, because when you have
that's because you get an annual phone call every year now. Dan has I don't know, he must have a pink file at the IRS. I don't know what the story is, but every year I get a phone call from him. He's like, dude, you're not going to believe it. It happened again.
But no, I don't get audited every year, but it's so funny how people try and get away with all this crap. Like he'll have people who are construction workers and own contracting companies, and they'll try and claim $100,000 in lumber to put an addition onto their home, where they'll try and just kind of make that disappear. And he says, here's a kid who is 24 years old, who did everything correctly, and he still got nailed, and he still got pegged, and he did everything correctly, and you're sitting here trying to get away with $100,000 of lumber to put an addition onto your house.
So
that's a recipe for disaster.
Yeah.
Right. And now you've seen some crazy stuff, right?
But you know what? Honestly, because we work with our clients, we don't let it get that far.
Right. Right. You stop it before it starts.
Yes, exactly.
But then you advise them on what they can do. What are some creative strategies that you've done for some people that you could share with us as far as how you help them save some money?
Okay. Well, let's talk about a real common one that we've all heard of, that probably, only maybe 50% of people take advantage of, is the home office. Okay. Mm-hmm. Home office deduction. Everyone, and then you hear, oh, you can't take the home office deduction. It's going to red flag you and everything like that. So, and the IRS a couple years ago came out with a safe harbor for home office. And it's not a huge deduction, but the wonderful thing about the home office is what it does is opens the door up for other things. Okay, it opens the door up for you commuting from your one office to the other office. Okay, it opens up the door for the home athletic facility, which is an on-premises athletic facility that could be your home gym or your pool. Okay, so
let me just stop you there, Craig. Our listeners know that I will not have that deduction. Now, is there a deduction for ordering pizza? No?
Only if it's for business, and it's you only get to deduct half of it. Okay.
What if I have to keep my figure because I'm on stage?
I don't think so.
Oh, all right. I tried. So there literally is. You can use your home gym as a deduction. Now, I know you can't write off your travel to your office, but you can. What you're saying is if you have a home office, you can go. You can start your day at that office and then go to the next office.
Correct. And you have to meet certain rules, like you have to spend 14 hours a week working out of that office. And if you think about all the emails you do when you're at home, that's nothing.
For sure. That's like a small drop in the bucket for a small business owner, right?
That's right.
So you're right. Yeah, it definitely opens up the door. What about home repairs?
Well, then you get a percentage. So let's just say your office takes up 10% and you do repairs, then you get to write off 10% of all the different things, your utilities, stuff like that.
All the different things?
Well, let's just say if you do repairs to your kitchen, no. Okay.
Right.
But if it's maintenance and repairs, that type of stuff, yes.
So the kitchen would not be considered the office cafeteria?
No.
How about I'm trying here, Dan. How about the hot tub?
If it's part of the home athletic facility, yes.
Okay. Now we're getting somewhere.
It's it. Look at Dan. Dan's like, maybe
it's like a pool, right?
Yeah. Well, I had a sauna in our basement, our last house. I built a sauna in the house, and then we did have like a little gym facility down there. This is stuff I didn't even realize.
Right.
Craig,
So
where
it's
were
pretty
you
cool.
5 years ago?
He was with the New York City Police Department for 17 years. But he's been doing this. How long have you been doing this, Craig?
I've been a CPA almost 17 years, and I've been doing tax planning for about 6.5 years.
Wow. Yeah. So this is fun, and I think our listeners would love us to go down this rabbit trail. So that's the home office, and there might be some other ones. Are there any ones you want to add related to the home there?
That's it as far as that.
Okay.
But the kids are related to the home, though, aren't they?
They are.
Okay, so you can hire your kids if they're doing work for you. All right. So now the tax court has ruled they have to be 7 years old. All right. I like to wait till they're about 11. All right. Now you have to pay them, a reasonable wage. That's basically for what they're doing, and they actually have to be paid. But say you're sending your kid to private school. So let's make that private school deductible. If your kid works for you, and let's just say he happens to make $500 a month, and you deposit that money into his bank account, and then the school drafts his account every month, you've basically made that a tax deductible school tuition. Okay, but you need to document everything. That they have to actually perform the work. You need to document everything.
How would you document that? How would you recommend it be documented?
I would recommend that they have a sign-in sheet. Okay, every day that they work, they sign in, they sign out, and they are actually doing work. Mm-hmm. All right. Another thing that has to do with kids is, kids need braces and dental work and stuff like that. Depending on the type of entity you have, you can have what we call a medical expense reimbursement plan. Mm-hmm. Which you could pay for those type of out-of-pocket costs and make them deductible, whereas typically as a medical expense, they're only deductible after they exceed 10% of your income. So you need to have, unfortunately, a lot of medical expenses before you can deduct them normally.
I hope people are taking notes. You can't you can't see on video, but I'm taking notes with
Dan's
all this.
got all kinds of notes. Actually, Craig, Dan's going to go out and get a kid this afternoon just so he can start.
I'm going to go buy one off of eBay.
A bunch of these things are in my book that I'm going to offer for free to your listeners at the end of the show. So I'll provide you a link. Okay.
Oh, that's fantastic. What a great resource. That's going to be good. Okay. Now we got kids. I don't want to talk about kids too much because then that means we have to go out and get kids. Did you have a question?
Yeah, I want to go back to something about communicating with your accountant. How often should you communicate with your CPA? Because people get this idea, tax time happens once a year, and that is the most busiest time of the year for CPAs. How often should you communicate with your CPA?
Well, I like to do it on a monthly basis. Maybe you don't talk to him 1 month, you talk to him the next month. But, you should try and communicate on a regular basis, at least, the very least quarterly, and don't wait until, it's tax season. And that's the reason we work with all of our clients throughout the year. So we won't work with somebody that just comes to us to do their taxes in March or April because, that takes valuable time away from the people that we're working with all year.
Right.
So, and it's important to communicate because it's dollars. It's saving you money.
Mm-hmm. And numbers, I am awful with numbers. Would you recommend somebody who is like me? Would you recommend they get a bookkeeper? Would you recommend that what's the process that you would recommend for people that they're not good with finances, they're not good with numbers? What would you recommend for them?
Well, I think most business owners, their time is better spent running and building their business, so they should outsource what they can. Mm-hmm. So. And I'll just take the process we use with our clients, okay? Unless they have a bookkeeper, okay, we're doing their bookkeeping for them. They have access to everything, all right? But we're doing it for them because our experience has been when we take the work of a bookkeeper, we're spending a lot of time, cleaning it up. And not a knock on bookkeepers, but just that's been the experience that we.
Because you haven't trained them on where to put the stuff in the right accounts and all that stuff.
And do you use QuickBooks?
We use QuickBooks, yes.
And because that's one of the issues. Early on in business, I used to use Quicken, and that wasn't recognized by the IRS. When I submitted that to the IRS, they said that's not good enough because there's no records in there. And QuickBooks was the one that they said this is what we're going to accept, this is what we're going to approve. So be careful for what program you're using. I use QuickBooks. I would highly recommend using it. And if you don't, start using it.
But Dan, to your point, so QuickBooks is very great for small businesses. At some point, you you grow out of QuickBooks if you get to be too big. And then QuickBooks is often used as just sort of the reporting mechanism,
right,
where numbers drop in and then reports drop out, P&Ls and all that type of stuff. But at the end of the day, I think you should use what your accountant wants you to use, because that makes their life a lot easier, and you're not the one putting the buttons in, or putting the the transactions in. If you're going to be outsourcing this to somebody like Craig or some other firm, then you should talk to them and find out what they use and make sure that you're using that system that they're recommending. Right. And I'm sure will say, Craig, that they use 3 or 4 different types of software or whatever it is. But at the end of the day, the software you pick has got to be on that list. Would you agree?
Yeah, and most people are using, QuickBooks is the big gorilla. For the most part, they're using QuickBooks or QuickBooks Online. There are some zero users out there, but I would, 90% of the people are using some type of an Intuit account, product.
Yeah, which is crazy. All right, so we talked about the house, the home office. We talked about the kids. We talked about the fact that we can't deduct the pizza. Okay, I get that. Let's talk about the autos, the vehicles, because that's always something that comes up, right? You can deduct your mileage, right, for business expense, to the percent of which you can do if you use your vehicle. I don't know. Can you? How do you? Because some people I know, some business owners I know, they have their business by the car. In my case, I didn't do that. I pay for the car monthly, and then I get reimbursed from my company for the miles. What do you like to see happen with that?
Whatever works for the client, and it's usually not, as long as everything is documented, it's usually not a problem with the IRS. So, if you're using the mileage expense, which is basically all your business miles, you multiply it out by whatever that year's number happens to be, and you reimburse yourself for that, okay? Or if you use the actual expense. So you can't switch from year to year, You could, when you change your vehicle, then you could change the way you could do it.
I see.
How do you recommend documenting your mileage? Is there a special way you recommend that?
No, when people keep calendars, there's apps now. There's all sorts of
I use it by
ways
Google Calendar.
So, it depends on how much traveling you're doing. You have to use something that's going to be easy for you to do.
Yeah.
I track it in my Google Calendar because that's where my appointments are, right? So I put my time in there, and then each month, on the first of the month, I go back into the Google Calendar for the previous month, and I sit there and I go to Google Maps, and I calculate all my routes that I went, and then I write my mileage on the sheet and file it in a thing, and then pay myself the mileage. It is so time-consuming to do that, and there's got to be a better way. There's got to be a better way. Maybe... I didn't do the company buy the car thing.
It works. It's still, even if the company bought it, it's still percentage of use.
Right.
So you'd have to pick up the income on a personal side for the
same difference
business use. So,
do you have a personal belief or a tax belief related to buying the vehicle for the business or leasing the vehicle for the business?
Well, typically, leasing the vehicle is going to give you a bit better deduction unless you're buying something, that's over 6,000 pounds. All right.
Like a construction vehicle type
like a
thing.
Truck or something like that, where you could, write off a big chunk of that the first year.
I did hear about that. Some of my contracting clients buy vehicles like that because they can write them off.
Right.
A big chunk of it.
Now, but remember, it's always nice to have the money in your pocket and pay tax than to not have the money and not pay tax.
Right.
This is true. We should not be buying vehicles and other things just to avoid tax when it means that we're not a profitable business at the end of the year.
Exactly.
So
that's a problem.
So business versus personal. There's a lot of business owners that I see that mix them way too much, and they'll even on a business trip they'll try and write every single thing off for business. They'll go in the places they go out to dinner, the places they go out for entertainment. How do you recommend, or what do you recommend as far as separating business and personal expenses?
Well, like when you're traveling, if you're traveling for business and you're meeting all the rules that I can't go into right now because I don't have them on the top of my head.
Yeah, right.
It's mostly business. All right. When you're at home, it's a different story. So if you're out with a client and you're having breakfast, lunch, or dinner, like I said, we all have phones. Everything is in there. Document it, and you're good. Going to the guy that picks up that cup of coffee every day at 7-Eleven, that's a tough one to justify.
Yeah. I
can just picture the IRS guy standing outside the 7-Eleven waiting for this guy to come in every day and going, you know what? This is not a business.
Well, what happens is when he's looking at that American Express bill and he sees you deducted all these, $2.15 at 7-Eleven, it's only going to cause him to look even further and deeper.
Here's kind of how I look at this. If I worked for Bank of America or if I worked for an ABC company, would that company pay me to go get a coffee? Probably not. If I worked for Bank of America, would they pay for an addition to my house? Probably not. So I kind of go in to my expenses with the mindset of I work for this company, and would this company go and buy me a cup of coffee every day? Nope. Would they buy me a donut every day? Nope. Would they buy me a pizza or McDonald's every day? Nope. Not that I go to McDonald's and get pizza every day, but these are things that I think when you go in with the mindset of if I worked for a conglomerate company or if I worked for a corporation, would they be paying for these things? Usually it's going to be no.
Exactly.
Yeah, it's a conscious check, right?
It's a conscious check, yes.
Yeah.
But
our square peg round holers, those are our listeners, by the way. Our
Yes.
square peg round holers have a conscience, Dan. They do. And so when they do a conscious check, if they can't justify writing off that burrito at 7-Eleven or Cumberland Farms or wherever they're going in the middle of the day, Taco Bell.
First off, if you get a burrito from Cumberland Farms, you deserve everything bad coming to you.
Man, do I know how to set you up for jokes, don't I? That was a good one. Yeah.
But it's true, though. You have to go in with
Craig,
that mindset.
Yeah. So Craig, what things haven't we asked you about related to things that value in living a tax-free life? I mean, what are people really asking you about on a regular basis?
They're asking us everything. Okay, they want to make sure they're getting the value that they should be getting. Okay, whether it's the dentist that is producing crowns, and is there any benefit? Does he qualify for what's called the domestic production activity deduction? All right, which is exactly. I shake your head.
Well, I'm shaking my head. I'm like, what is that?
So it's a deduction that the government gives you basically for producing things in the United States for manufacturing, and it's a very overlooked deduction.
Yeah.
And part of it has to do with when it first came out, it was only 3% of a certain number, and now it's 9%. So it might have been a lot of work for 3%, but when you look at 9%, it's a worthwhile work.
Oh, interesting.
So there's stuff like that. Retirement plans.
Yeah.
If they're making money, put some money away.
Yeah.
Take advantage of it.
Yeah, we do. I mean, I'm very, very big on that. Especially business owners who started and they're bootstrapping their business. They don't have a lot of cash at the beginning. So once they get past that 5-year mark, and they're getting into a streamlined effect of business, they really need to pile on some of that retirement money to make sure that they're going to be safe at the end of it.
Right. And like I said, they need to make sure you pay yourself. It's easy, I think as a business owner to chase those shiny objects and stuff. And, you want to grow it. So you're going to spend money on this, spend money on that. And, you look at what are you actually taking home sometimes and realize, wow, I spent a lot of money that I probably shouldn't have if I would have maybe taken the time and thought out every expense.
My advisor once told me that you need to pay yourself what you would traditionally pay somebody to be in that role that you do for the business. You need to pay yourself that, and as a pay.
That's called reasonable compensation. Exactly.
Yeah, and then after that is where you can start taking the disbursements from the business and not paying the Social Security tax on that, versus
Correct.
payroll tax. Yeah.
Correct.
And then that was an interesting eye opener for me. The other thing you brought up a little bit ago was the entity for the business and picking the right entity. So are there situations where a business would change entities after they've been in business 3, 5, 7, 10 years?
Yes. It happens all the time.
Oh, it does.
Yeah, it happens all the time. And sometimes it's as simple as making an election or a late election.
An election.
An election. All it is an election you file with your tax return, and maybe sometimes it has to be a letter that you have to attach to it. But yeah, sometimes it's simple. Sometimes it's a little bit more work. But if you're operating in the wrong entity type, it makes sense to, work out of the correct entity type
for protection reasons and for tax reasons. I would
correct.
Think. Yeah,
correct. And I mean, you see it a lot with real estate where people own this real estate in their own name, and God forbid,
right.
But operating businesses.
You're talking about investment or business real estate,
right? But
right.
And then you have businesses, just guys operating as sole proprietorships when
Yeah, so that happened to me when I started my web business originally back in 2002. It was a sole proprietorship. And as it grew, eventually creating more revenue and starting to have employees and leasing space and starting to go to trade shows where I needed insurance and business owner policies, I eventually changed and incorporated about probably 3 years in.
Right.
And it made sense because I remember having the conversation with my tax guy at the time, and I think I posed the question as, does it make sense to make a change on this entity? Are there benefits for me to do so? And sometimes there's financial benefits, but sometimes there's not. Sometimes there are risk benefits, right? And protection benefits like LLCs,
Yes.
things like that.
correct.
And I'm no lawyer. You should consult a lawyer.
Me neither. I'm not an attorney either. And we always tell the clients, yes, you should speak with your attorney. But sometimes you may already have that entity, set up, and you just need to do a couple of things to make it more tax efficient.
You mentioned attorney. Where do people need to get a tax attorney? Where or is there such thing?
There are tax attorneys. Hopefully nobody's in the position where they need a tax attorney. I guess when the numbers get real large, okay, maybe you might need one then. If you're in trouble and you've been doing things you shouldn't have been doing, you're definitely going to need one then. So I would say otherwise, for the most part, a tax attorney might be a bit of an overkill for the typical business owner.
Got it.
Yeah. So to our listeners, our square peg round holers, I mean, you've got some great value here. I mean, Craig is just bringing it today. Lots of great stuff. And as Craig, you mentioned, you've got a book. Why don't you tell us a little bit about your book?
Sure. My latest book, my first book was Secrets of a Tax-Free Life, which I co-authored, and that was an Amazon bestseller. My other book's about a year and a half old. It's the 10 most expensive tax mistakes that cost business owners thousands. And we'll give you a link where they could go to offer your show notes, and we'll send them a free copy.
Awesome. Is that a paperback?
Yes, it's a paperback.
Wow.
You're going to send a free copy of the paperback?
Snail mail, yes.
Wow. Go grab that.
That was a value bomb right
Yeah.
there. Am I allowed to use that with a former NYPD
Yes.
person?
Okay. I like that value bomb.
Yeah, that's we stole that from JLD. I can't claim. Dan used to say that all the time. In fact, on the very first episode of the SPRH podcast we recorded, we were going to tell everybody what we were doing. It's episode 000. He was talking about value bombs left and right.
Value bomb.
Yeah.
Value bombs, knowledge bombs. That's right.
Actually, you know what? I'm going to put my address in there. I'm going to get that book.
Yeah.
I need that book.
I will make sure you get one.
I think we all need that book. We all could use that book.
Some great value.
All right, Square Peg Round Holers today. Craig, Cody, episode 48. Craig, thank you so much for being on with us. We really appreciate everything you had to say, and you made tax prep interesting.
Oh, thank you very much for having me.
Yeah, so much value. Thanks for joining us. We appreciate it.
Right.
Hey, Matt, what's your Yahoo moment?
So, Dan, my Yahoo moment is all about communication. We've talked a lot about communication on our podcast before. And what I love most about what Cody would talked about was the fact that, he learned that in the New York City Police Department, being with the NYPD for 17 years. And he brings that to his accounting practice. And I think that's key. Communication within any business, small, large, or otherwise, is really a key to having success and growth and getting the traction that you really want. So I take away communication.
Yeah, that's a really good one. Mine was plan. Plan. When you think you've planned enough, do some more planning. When you look into your bank account and let's say your business has brought in like $10,000, that's not a time to say, woohoo, now I can go buy that or put a down payment on that car that I wanted. No, that's to go say, okay, how much does this have to be expended into taxes now? Because tax is all about business planning. It's not your money; it's the government's money. So you have to plan for that. So that way you don't get this huge tax bill, and now you have to put everything on credit cards. You have to remortgage your house to pay your taxes. So plan. When you think you've planned enough, plan some more.
Right on.
Speaking of planning, Matt, hey, we're planning something coming up, aren't we?
That's right. Hop on over to sprhpodcast.com and join our waiting list. We got a cool event coming up. We're going to make more announcements soon. And we're ironing out the details, Dan and I, and we're slotting in some cool people that we know to kind of help you grow your business. We are looking at a 2.5-day in-person event, and you need to get on the waiting list to be part of that early email announcement. We are only releasing it to the wait list first, and so if you want first shot at that, it will be a limited event because we're not booking a ballroom for this thing. We're going to book a small space, like 10, maybe 15 people, something like that.
Exactly. So make sure you go and get on that waiting list now. Take massive action.
And you can get all the links to Cody's books to get your free copy of his book that he offered in the show notes at sprhpodcast.com/048.
You just listened to the SPRH podcast with Matt Ward and Dan Candell, where you learn from the pros how to take massive action. Remember, have yourself an action-oriented day.